If more trading meant more profit, every retail trader on YouTube would be a millionaire. Right? But have you ever thought of the reason they are not? According to a study of 66,000 investors by Barber and Odeon, the more you trade, the worse you do. That's not my opinion. That's a 20-year study backed by hard data. So why do so many traders keep falling into the same trap? Well, I have an answer for you. It's something called the illusion of opportunity, and it happens every second of every trading day. And by the end of this video, you'll know exactly how to block it out so it doesn't stop you from ever becoming profitable. This video is sponsored by Margix. More on them later on in the video. Trading is hazardous to your wealth. Barber and Odeon. In the year 2000, two finance professors, Brad Barber and Terrence Odeon, were sitting in their quiet offices, staring at a storm no one else seems to notice. They kept seeing regular people, teachers, engineers, retirees, even students jump into the market, convinced they found the secret to wealth. Click, buy, sell, and repeat. It looks like control, but they suspect it's chaos in disguise. So they ask a question most traders never dare to ask themselves. Does day trading actually make you more money, or does it just feel like it does? What they did next had never been done on this scale. They got their hands on something no one else had access to. Over 66,000 real brokerage accounts, not demo accounts, not paper trades. 5 years of raw, real-life trading data with people's life savings on the line. They were looking at us. People just like you and I. The person watching this right now, hoping to grow their money, trying to outsmart the system, or maybe even trying to escape a 9-to-5. And what they discovered wasn't just surprising, it was devastating. People who traded the most, that is, those who were in and out of the market constantly, chasing setups, glued to the charts, made just 11.4% per year. But those who barely touched their portfolio, who did what most of us would call boring, earned 18.5% annually. That's over 60% more than the active traders in the same market in the same time frame, just for doing less. Now maybe you're thinking, okay, maybe the active traders just got unlucky. But no, they didn't. When Barber and Odeon looked deeper, they discovered that the people who lost money weren't victims of randomness. They were making consistently bad decisions. They weren't just losing to the market, they were losing to themselves. Barber and Odeon found that the assets these traders sold actually went on to outperform the ones they bought, over and over again. That means traders were selling the winners and buying the losers. Why? You might wonder. Well, it was because they were listening to noise, to excitement, to fear, to signals that had nothing to do with real value and everything to do with emotion. If you've ever watched a chart for too long and felt your fingers twitch, felt that pull to do something, then this story, it's not just theirs, it's yours too. But hey, it was once my story, and that's why in the rest of this video, I'm going to show you exactly why we fall for this trap, how I broke free from it myself, and how you can too. The illusion of validity. Why you mistake noise for signal. In 2008, a hedge fund decided to conduct a twisted experiment. They created a trading bot that did nothing, like absolutely nothing except simulate random coin flips and display them as stock tickers. No market connection, no strategy, just pure and unadulterated randomness. Then they watched. Within weeks, retail traders began shadowing these moves. They analyzed the patterns. They reverse-engineered the strategy. They threw real money at virtual coin flips, convinced they had discovered the next Warren Buffett. Some of these traders actually made money, temporarily. The lucky ones became evangelists, spreading the gospel of their system across trading forums. But the unlucky ones blamed execution, timing, or market manipulation. Nobody suspected they were worshiping at the altar of chance. Psychologists have a clinical term for this madness, the illusion of validity. It's your brain's unshakable confidence that it can extract prophecy from chaos, that it can read tomorrow's headlines in today's candlesticks. Watch a day trader's screen for 5 minutes. Count how many obvious patterns they point out. Head and shoulders here, support and resistance there, RSI divergence everywhere. Each formation carries the weight of absolute certainty. But strip away the fancy names and complex indicators, and you're often left with something uncomfortably close to that coin-flipping bot, but dressed up in randomness and sophisticated noise. The market doesn't care about your trend lines. It doesn't respect your Fibonacci retracements. It moves on fundamentals you can't see, driven by algorithms you can't comprehend, influenced by geopolitical events you can't predict. Yet there you sit, convinced you can decode its secrets with a few squiggly lines on a screen. This is how fortunes evaporate before the first trade executes, and it's not because the market is rigged against you, although institutional advantages are real. Not because your broker is hunting your stops, although that happens too. Your edge disappears the moment you mistake the chaos orchestra for a symphony, when you hear music in the static. However, somewhere out there, right now, another trader is opening their device, hearing that same riot of meaningless noise, and preparing to make the same eternal mistake. The question is, will it be you? But don't answer just yet. Maybe hearing the price you pay for this action will help you make better decisions. While you're watching this, Bitcoin is smashing through major resistance and altcoins are going parabolic. We are looking at potential new all-time highs, the kind of momentum that creates life-changing wealth. This is what traders wait years for. The volatility is absolutely insane, which means massive opportunity for those positioned correctly. Smart money is loading up on longs while retail is still asking, is this real? But if you want to capitalize on this historic move, MarkX is throwing bonuses at new traders right now. $50 registration bonus. An additional $50 bonus for deposit of $100 and above. These bonuses cover 50% of your trading fees, meaning you keep more profits when crypto inevitably hits those next psychological levels. MarkX is handing out free money. The question is, are you going to take it? Join now using the link in the description and pinned comment. Move fast. Bull runs don't wait for anyone. Now let's get back to the video. The performance penalty of active trading. If I'm working harder, shouldn't I be earning more? It is 2:30 a.m. Your eyes burn from staring at charts for 14 straight hours. Your coffee has gone cold for the 3rd time today. You've executed 12 trades already, each one backed by solid analysis, with each one promising to be the breakthrough for a profitable day. But tomorrow, you will wake up poorer than when you started today. There is a saying on Wall Street, don't just do something, stand there. It sounds backwards, doesn't it? However, buried in the research of Brad Barber and Terence Odion lies a truth that should terrify everyday trader on the planet. Their study didn't just reveal underperformance. It exposed systematic wealth destruction on an industrial scale. The passive investor, doing absolutely nothing, earns 18.5% annual returns. But the active day trader, grinding 16-hour a day, makes 11.4% annual returns. That 7.1 percentage point gap isn't just a statistical footnote. It's a financial death sentence served in slow motion. While it might not look like much, over the 5 years period of the research, that small difference compounds into a wealth gap exceeding 60%. For context, it means the person sitting still becomes 60% richer than the person running marathons on their keyboard. Think about that for a moment. It means, while you are burning through your 20s analyzing price action and optimizing entry signals, your lazy neighbor who bought index funds and went golfing is building generational wealth. But why does it happen? Why does more effort bring less reward? Why does the market seem to punish ambition while rewarding restraint? The answer comes down to 3 brutal truths that most traders only learn the hard way. First is the illusion of control. Every winning trade whispers in your ear, "You've cracked it, you're different." But the market is a patient predator. It waits, letting your confidence swell into hubris. And then it strikes, not out of malice, but because you got too comfortable. And there is the invisible tax. Every trade costs you something. Spreads, slippage, and commissions. They seem small, a few cents here, a few dollars there, but multiply that by hundreds or thousands of trades. And suddenly, you are not feeding your account, you're feeding the house. And the more you play, the more it eats. Third is the revenge trade spiral. When you lose once, and your brain panics, logic disappears, and risk management becomes optional. And before you know it, you're not trading anymore. You're chasing your pride, your losses, your need to feel in control. But each decision is worse than the last, until you've bet your clarity, your capital, and sometimes your self-worth. So what is the solution? That is what the concluding part of this video is about. The solution: strategic stillness and noise immunity. Have you ever heard of the samurai who never lost a single duel? His name was Miyamoto Musashi, and by the age of 13, he had already fought and defeated a grown man in a duel. By the end of his life, he had fought over 60 opponents, and not once did he lose. But what made him superior wasn't his strength. It wasn't even sword skill. What made Musashi unbeatable was something much rarer. It was the day he fought Sasaki Kojiro, the fastest swordsman in Japan at the time, that revealed everything. His opponent, Sasaki Kojiro, was a legend in his own right, unmatched in speed, brutal, precise, and worshipped. He arrived early at the venue of their duel, sharp and restless while pacing the sand. But Musashi showed up late, and it was intentional. He would later arrive by boat, calm, slow, with a wooden sword he carved from an oar. Kojiro, now seething with rage, lunged with all the speed that made him famous. But Musashi simply stepped aside, and with one precise, effortless strike ended the fight before Kojiro could swing again. Miyamoto Musashi didn't beat speed with speed. He beat it with stillness. He won because he understood a timeless truth. Victory belongs to those who wait in silence. And that truth applies far beyond the battlefield. Most traders today operate like Kojiro. They chase signals, are obsessed with action, do more charts, more news, and take more trades. But action without clarity is just noise, and in the markets, noise is expensive. I used to trade like that, glued to screens, obsessed with setups, clicking buy and sell buttons just to feel in control. But slowly, painfully, I learned what Musashi knew all along. The one who is addicted to swinging and very fast often loses. That's why I now practice something I call strategic stillness. I trade less, but I think more. I spend time filtering instead of consuming. I no longer chase the thrill. Now, I chase conviction. Swing trading suits me now. A few calculated moves, not 100 frantic ones. And I've built long-term habits too. Every month, I invest a fixed amount into Bitcoin and index funds. Now, I don't second guess. I don't panic. I do my trading now with clarity. And over time, it will add up, because while trading can bring quick wins, compounding wealth quietly outpaces it all. If I had invested $100 monthly in Bitcoin since 2013, I will be sitting on over $800,000 today. Not by reacting, not by trading, but by just waiting. So ask yourself honestly, is your current trading plan designed to win duels? Or are you just swinging wildly like Kojiro? Fast, furious, while paying the house consistently. You've probably heard it 100 times, but in this game, like on the battlefield, the first to move is often the first to fall. It's not about being fast, it's about being certain. And that brings us back to where we started. Have you heard of the samurai who never lost? Well, now, you have. The only question left is, when the moment comes, will you be the one who swings first, or the one who no longer needs to? So before you take your next trade, remember that the more you trade, the worse you tend to do. It's not theory, it's data. Stillness isn't weakness, it is a strategy. Choose it. I know, it's easier said than done, but if you must know, one of the biggest shifts in my trading journey was realizing I can't do it all alone. That's why I made a video on how AI can actually transform the way you trade. If you are ready to stop guessing and start trading smarter, click the recommended video now. It might just change how you see the game. Until next time, may the trend be with you.